Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming out of a midweek rare holiday and markets slightly lower. I mean, we have 2 days of US markets to react to. Lots of news flow. We'll pick and choose because the volume of news flow is just staggering, especially with regards to Trump, tariffs and more. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Hi, good morning. Trump, tariffs, Nvidia tech. You've got cables and wires, cement stocks to watch, RBI. And not to forget, it's the series expiry. So an action-packed Thursday morning.
Well, that's right. And the golden visa as well. I mean, in the United States, 45 crores, whoopsie-daisy. that's a large one.
Yeah, I mean, I think the earlier program, the EB5 program, used to cost about $800,000. So that's a 6x price increase.
True.
But as someone said, right, it's just half of the cost of what you would pay to buy a property in Camellias in the LF.
I mean,
I'm just...
That's true, but yeah, I mean, you know, like everything, cost is going up, right? Yeah. Tariffs are taking prices up, and of course, the pathway to US citizenship, the price is going up as well. Well, let's just see if the market can do anything of that sort, go up, that is. But just the first price action, right? Last 2 days in terms of what we saw. So Tuesday's US market session, yesterday's US market session, so 2 days worth of reaction, and that's what it amounts to. So S&P down about 0.5%. The NASDAQ is down about 1%. The 10-year yield has sold off 15 basis points in the last 2 sessions. That is huge. If you can move the graphic along, 10 basis points day before yesterday and 5 last night. And we are now at 4.25%. That is actually a very, very large move coming in as far as yields are concerned. And at the margin, I think this is more to do with growth fears coming back. And I'll talk about that in a bit. Dollar index is down as well. So for a 2-day basis, not very much, but 106.45. Oil prices are down 2.5% to about $73 a barrel. So everything kind of down and subdued. That's essentially the takeaway over the last 2 sessions. Now, the news flow, I'll start with what was latest, which is Nvidia earnings. Numbers came out post-close. They've beaten expectations, but it is not a blowout quarter. Both on the fourth quarter numbers and the first quarter guidance, numbers are better, but marginally better. Nothing like what we saw 2 quarters back. I mean, actually, when they really were, you could describe them as blowout. Nothing of that sort. So Nvidia CEO Jensen Huang said the demand for their newest Blackwell chips have been amazing. So that was essentially a commentary. And I think this view will evolve on Nvidia, even though we've seen a 1-day reaction. I think the stock swung. It was actually, up at one point. Then last I checked, it was down about just under 1% or so. That's, of course, post-close. The close itself was about 3.5% higher. Now, Trump, of course, is a constant feature every day. So he essentially said that the Mexico and Canada tariffs will come into effect from the 2nd of April, not early March. Remember, these tariffs were supposed to go into effect from the 2nd or 3rd of March, I think. And now he's saying, well, they've been pushed out. They're in negotiations with both countries, and they're hopeful of maybe reaching an agreement of some sort. Tariffs will go up, but how much, etc., will it be watered down? That's the indication that you get from this. In terms of Russia, Ukraine, the conflict which is going on, day before yesterday, the news broke that Trump is essentially negotiating with Ukraine for access to their rare earth mineral resources that Ukraine has in exchange for some sort of assistance. Last night, Trump confirmed that Ukrainian President Zelensky will come to the White House on Friday and sign the minerals deal, which gives U.S. access to develop these sites in terms of rare earth and other minerals, etc. Russia, of course, is saying that any of this deal is contingent on a peace agreement first, so we'll see how this one evolves. And of course, day before yesterday, Trump also signed an executive order which opens an investigation on copper imports. Now, there's no timeline to this. There are about 200 plus investigations into these copper imports. So it looks like it's going to be a long outstretched one, but copper prices had in fact reacted a little bit in response to this. I mentioned US growth fears, and this essentially, remember, US services PMI number was weak. You also now have the Conference Board Consumer Confidence reading for the month of February, which is coming lower. And in that data, the 6-month ahead expectations measure was also weak. And I think this is the main reason why you've got yields, bond market, bonds rising and yields actually falling. So, I mean, actually, the overall picture is nothing exuberant. It's the continuation of what we've been seeing since last Friday in the US when we started to see a bit of a pullback. Levels here then, so Nifty, of course, on Tuesday, which is the last session, ended lower, and of course, no signs of reversal yet. Support on the Nifty comes in at about 22,396. Just about 150 points away. Resistance at 22,740, which is the 40-hourly average, and the swing high, which is 23,050. Bank Nifty similarly ended lower, but flattish actually. Support comes in at 47,844. Resistance comes in at the 40-hourly, which is 40-day exponential average, which is 48,909, and then the swing high, which is 49,628. GIFT Nifty will give you a quick sense of how we are likely to start. About 5-point change. This is similar to what we had on Tuesday morning, but of course then we were going into a holiday. No such thing today. We are full of news flow and lots of headlines as well. Rima.
Indeed, Tuesday was a very quiet range bound. The Nifty moved in just about 110-point range but managed to defend 25,500. Well, on Tuesday, it's more of the same. The FIs continue to be net sellers. They sold 3,500 crore in the cash market. Domestic institutions turned out to be buyers, buying close to about 3,000 crore rupees. Well, today is the Nifty February series expiry, and this would mark the 5th consecutive series where we are likely to close in the red. And the last instance of 5 straight months of negative returns for the Nifty happened 28 years ago in 1996. And in the last 5 series, I think the Nifty is down close to about 14%. 2 sectors to watch today, and we'll get to them in detail as the show progresses. The first one is cables and wires, because Ultratech Cement has announced its foray into that. So is this going to be another Birla Opus Paints kind of a moment disruption for the sector? So watch for stocks like Havells, Polycab, RR Kabel and the rest. And the second one is the NBFCs, because the RBI has gone back to 100% risk weightages for the A-plus NBFCs, the A-rated NBFCs. So stocks like Bandhan Bank, etc., have been identified as potential beneficiaries of that.
Well, looking at the US economy, there is some weakness in terms of data. I don't think it's so bad unless the US economy is going to bomb out, because the yields have come down, the dollar index as well as a little bit soft, and the talk was that US was getting a larger share of the flows. So if it's a little bit weakish, I don't think it's so bad. Well, as you mentioned, today is the weekly expiry, and we're going to be ending the series for the 5th straight time in the negative zone, which hasn't happened in multiple years. And I'll tell you what, looking at it positively, when the last time when we had 5 negative months, that was in 1996, the following month we had a good return. The following 6 months as well, the returns were very, very good. And the next 12 months were very, very good. And we know what happened from there on. So look at it positively, in terms of some kind of positive twist I was trying to give that one. The last time it took place was in 1996. Now, moving to the rollover picture. Well, the rolls are still much lower. Could be because of the truncated week. But the rolls, both on the Nifty as well as the Nifty Bank, are relatively lower in comparison to what we saw in the January series. So there is a fair bit of action we're looking forward to. So keep an eye out on that. Moving to what did the FIs do? Well, after a while, they added more longs than short positions. And now, the long positioning is actually at the highest you've seen in multiple weeks. I think the last time you saw the FI long positions at these levels was, 5th of February. So the longs outweighing the short positions, that's a bit of a positive. Let's see whether it reflects in the index movement, but that's a positive. Since it's the monthly expiry, we're looking at 2 strikes, 22,650 call, 22,600 put. Both of them were fairly active in trade, and the premiums as well up for you on the screen. Punching in the levels, punching in the recent technical zones that we have visited on the downside, it seems that the range is around 22,450 on the downside in terms of a support, and 100 points higher is the resistance mark, because we have tried to visit this 22,650 to around 22,600, but we haven't got past that. So that's the important range for today. The Nifty Bank is going to be very, very important. What was good in the previous trading session was at least we made a little bit of a higher high, and we made also a higher low, which was encouraging after the last few trading sessions. So that's good. You'll want that to continue as well. You'll have to bet on the Nifty Bank, fighting back for the bulls if there is going to be a fight back. So the Nifty Bank is the one to track. In terms of levels that you're looking at the Nifty Bank, keep an eye out on both these two. the high as well as the low in the previous trading session. Now, the RBI, well, they have cut the weight on loans given by banks to NBFCs as well as MFIs. This is a positive move with regard to liquidity. But more than stock-specific action, the tone that is coming from the new RBI governor is positive. There has been rate cuts, forex swaps, OMOs, and now, in fact, cutting the risk weights on bank loans given. So the tone is more accommodated in that sense. So that's a positive as well. The RBI governor is doing this, and the results of this will flow through in the coming months as well. So the economy appears to be in a pretty good pace. The stocks that we're looking at, UltraTech Cement, they're diversifying. Maybe some bit of worry on the asset allocation front. We'll see how that goes. But otherwise, the cables and wires players, well, they'll be a little bit nervous knowing that a big player is coming into their space. So all of them will be in focus as well.
All right. Nigel, thanks very much for that. Well, let's